On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners financial advice provider disclosure statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Morning team, hope everyone is well. Let's take a look back at last week, then let's turn our attention to the week ahead. Global share markets, starting with the US. The S&P 500 index did slip back a little bit last week. It was down 0.4%, but most other markets were up solidly. Japan up 4.1%, emerging market shares up 2.2%, the UK up 1.1%, Europe up 0.7%. Closer to home, the Aussie market had a good week. The ASX 200 was up 2.1%, and the local NZX 50 was up 0.2%. So this year has started very well for share investors so far. All the major indices are in positive territory. Japan and emerging market equities are leading the charge. They're up 7.3% and 5.7%. Those were the two top performing regions from last year as well, and they're number 1 and 2 this year. And gold also doing very well. After a stellar 2025, gold prices were up 73% last year, best year since 1979. Gold is up another 6.4% so far this year. I think that's on the back of some of those geopolitical issues that we're seeing out there in the world, whether it's Venezuela, whether it's Iran, you name it. Also ongoing concerns about debt levels in places like the United States, expectations of interest rates coming down in the US. That's good for gold usually. So a whole range of things are driving gold prices higher. Interest rates are a little changed in 2026. The NZ 5-year swap rate is down just 2 basis points, so that's hardly at all. It's sitting at about 3.5%, and in the US, we've seen a marginal uplift. The 10-year Treasury yield is up 4.2%. Here's a quick question, looking back at 2025. If we take the major 5 regions for equity markets, the US, the UK, Europe, Japan and emerging markets, those are the 5 big ones. Where do you think the US ranks in terms of 2025 returns? Yeah, okay, well, I'll tell you the answer. It was last place US shares out of the US, UK, Europe, Japan and emerging markets. I just think that's interesting. Some of you might not appreciate that because we hear a lot about the United States, the S&P 500, the Mag 7, the tech sector. So a lot of lay people who aren't watching markets super closely might think, well, the US had a good year last year, so it was probably one of the strongest performers. Interestingly, it was outpaced by all of those other markets, the UK, Europe, Japan and emerging markets. So I just think that's interesting. Anyway, moving on, let's talk about some of the key releases from last week. And here in NZ, it was the QSBO survey that came out last week, the quarterly survey of business opinion. This is from the NZIER. It's essentially a confidence survey, comes out every quarter, been going for decades. We know the Reserve Bank watches it really closely. It's a very credible survey and it tells us a lot about where we think the economy is going. And very good news, business confidence hit an 11-year high, so a very strong lift. A net 39% of firms expecting better conditions over the coming months. So this was a big increase and it corroborates what we saw in the December ANZ Business Outlook, which is an alternate survey. It comes out more frequently, monthly, and in that survey, sentiment hit the highest level in 30 years. So very good, and I think that is something you can add to all of those positive indicators we've seen lately. There was also some manufacturing data last week out in New Zealand looking pretty solid. We know the Reserve Bank watches all of these things, and I think this string of good news we've seen will put to rest any doubts that we have seen the last OCR cut this cycle. So markets are now looking ahead to decide, well, what's the next move? Most likely it's going to be up. When will that move come? The Reserve Bank forecasts obviously suggest that as being a 2027 story. When you look at the big four banks, I think 3 out of 4 are also saying 2027. Westpac thinks there'll be a hike this year, and financial market pricing is pointing to a hike by the October meeting this year. So financial markets see 1, maybe 2 hikes this year. So we'll see if they're right. Let's see how the year progresses. But that was the key release here in NZ. Internationally, it was US CPI inflation that came out. This was for December, and it was good news. The headline CPI increased 0.3% for the month, the core measure up 0.2%. At an annual level, headline inflation unchanged at 2.7 and core inflation unchanged at 2.6. So that was a little lower than expectations. It's good news. That is the lowest we've seen core inflation at since March 2021. So the Federal Reserve meets later this month, and no one's expecting any change to policy settings. Obviously, a lot going on in terms of the Trump administration versus Powell and all the drama that you're seeing there. The politicians want to see further easing, but I'm not sure you'll see that this month. And in fact, I think those recent developments might have cemented the Fed's on-hold position, as the Fed will not want to be seen bowing to any political pressure. So no change likely this month, even though inflation is a little bit softer in the US. But when you look out over the balance of this calendar year, markets see 2 more rate cuts from the Fed. So another 50 basis points roughly of cuts coming over the year, and June looking set to be the most likely timing. So an interesting dynamic, isn't it? Markets here in New Zealand see 1 or 2 hikes in the OCR, and markets see 1 or 2 cuts to the Fed funds rate. So that interest rate differential should narrow, and that's one reason I think the Kiwi dollar should be a little higher over the balance of this year. Right, turning to the week ahead, and for a start, it will be a holiday shortened week in the US. Markets are closed on Monday for Martin Luther King Jr. Day, so it'll be a shorter week. In terms of economic data, I will be watching global flash PMIs very closely. These are essentially activity indicators. PMI stands for Purchasing Managers Index. The reason these interest me a lot is because they come out really quickly. So these will cover the month of January. So they'll be hot off the press, and they will be one of the first indicators we'll see for how things are tracking in 2026. They're out on Friday, so we'll get the Australian one at 11 a.m. Japan comes out after lunch at 1:30. Then over the evening and into the early hours of Saturday morning, we'll get the UK, Europe, and the US. They will follow. In December, all of those regions were comfortably in expansionary territory, and it'll be interesting to see how activity levels have started this year. So that is the key international economic release for me. We will also have the World Economic Forum's annual meeting. That's in Davos, and US President Trump will give a special address on Wednesday that will be closely watched. I think Christine Lagarde from the ECB is also speaking at that event Wednesday, maybe Friday, maybe both, I forget. But Trump on Wednesday and Lagarde at some point. In terms of central banks, the key event will be the Bank of Japan decision. This is out on Friday, and if you want a refresher on what's been happening in Japan, why it's such an interesting country at the moment in a financial sense, in a political sense, I did record an episode last week specifically about Japan, so go and take a listen to that one. But this Friday, we've got the BOJ decision. Now, the policy rate is sitting at 0.5% in Japan, which is really low compared to us, compared to Australia, the UK, the US. But in Japan, that's the highest we've seen since the mid-1990s. So it has been very different to what we've seen in other parts of the world of late. No change expected this week. I think they'll be on hold. But again, thinking about where markets are at, markets see about 2 hikes over the balance of this year. So they do see the Bank of Japan normalising monetary policy. And that will have implications for financial markets, for bond yields and so forth. The 10-year JGB yield in Japan has pushed up to the highest levels we've seen in 25 years on the back of these expectations. And there's probably more to come there. So that will be a really interesting one on Friday afternoon. Here in New Zealand, a really busy week looms. There's lots to watch. On Wednesday morning, we'll get the latest global dairy trade auction results, and these are the second ones of the year. The first ones were really good, so the year is off to a great start. We saw the headline GDT index rise 6.3% a couple of weeks ago, so that broke a 9-auction losing streak. Last year, dairy prices were really weak. We saw the headline index fall 17% over the whole year, and we saw a 9-auction losing streak. So 6.3% gain a couple of weeks ago. That's the best we've seen in about 5 years in terms of the quantum of that rise. So hopefully things will continue. Fonterra did cut its milk price forecast twice at the back end of last year. It cut it in November, then they cut it again in December. So it's now expecting a range of $8.50 to $9.50. So that's a midpoint of $9, which isn't too bad at all when you look back through the last 5, 10, 20 years. $9 is not bad, although it's down quite a bit from the previous season, which was north of $10, and from where expectations were at, 6 or 12 months ago, where Fonterra was hoping we might get back-to-back $10 payouts, but now we're sort of down at $9. So not the end of the world, but it would be great to see a bit of an uplift in dairy prices like we saw a fortnight ago. We'll also get the first housing market report of the year from the Real Estate Institute, and I think this is out on Thursday morning, 9 a.m. They usually come out. This will cover December, so it will sort of close out the year for us. We'll be watching for any further evidence that the market is improving. Anecdotally, definitely feels like the housing market is improving. Not flying, we don't want it to fly, but a bit of stability and a bit more activity and maybe a little bit of modest upward pressure on prices wouldn't be a bad thing economically. Looking back to the November figures, sales volumes were up about 3%. The days to sell was sitting at 42%, so not too bad. Prices pushed up a little bit, so that's 4 consecutive monthly gains that we've seen after a very weak sort of 8 or 9 month stretch early last year. So prices are in positive territory for 2025. And we haven't got the December data yet, so I can't tell you exactly what they did over the whole of last year. But as of November, they were up 0.8%, so a pretty mediocre year, and they're still 15% below that peak from late 2021, but we'll get that update on Thursday morning. Now, the highlight of this week here in New Zealand will come late in the week. It will be on Friday at 10:45 a.m, and this will be the inflation report for the December quarter. And this is a key release ahead of next month's Reserve Bank meeting. We've had that QSBO that I talked about right at the start. That was something we were all looking forward to. That's important from the Reserve Bank's perspective. The other things that are really important are inflation and the unemployment figures, which will come out in due course. But the inflation report on Friday, markets watching very closely to see if we see any drop-off in the inflation rate. It was sitting at 3% in the September quarter. That was the highest in more than a year, and that is, of course, at the top of the Reserve Bank's 1 to 3% target band. Now, Reserve Bank forecast from back in November, when they last did a monetary policy statement, they suggested it will moderate in these figures to 2.7%. However, since that was out, we've seen a few other indicators that point to a little bit more pricing pressure than was evident back in November. So economists have actually pushed up their forecast. So the Reserve Bank's at 2.7, but it's a bit of an outdated forecast. The economists out there are expecting it to be steady at 3%. So that wouldn't be the end of the world. Look, it's within the band or at the top of the band. The Reserve Bank would prefer it to be closer to 2 than 3, but we'll see. That is out on Friday. I think if it does come out at 3 or close to 3, that will just provide yet another piece of evidence that the OCR is not going any lower. That next meeting from the Reserve Bank is in mid-February. I'm expecting no change at that point, and we'll see a string of no changes, I would expect. But right now, markets are pricing in 40 basis points of hikes before the end of the year. So that is basically saying one hike is definite and there's a chance you'll get a second one, and that will change as you get each data point come out. But that's where they're at right now, 40 basis points. So you may as well say at least one, probably two hikes in the eyes of financial markets, and markets see September as the first live meeting, in the sense that that's when that first hike could come. Market pricing points to a 60% likelihood of a hike at that September meeting. Then you go ahead to October and markets see that as pretty much a done deal. So we'll wait and see. It might not play out that way, but if the economy remains strong and that sort of momentum that we're seeing early signs of picks up, and if inflation is still at the upper end of that band, then yeah, that's entirely possible. Last but not least, we will have the international reporting season heat up. We had a few companies report last week, some of the big banks. The results weren't bad, a bit of a mixed response in terms of share prices, but JP Morgan and so forth, still very strong numbers from what I thought. I thought they were good results. Anyway, things will get really busy this week. I think there's about 35 odd S&P 500 companies scheduled to announce results, and others around the world too. It's not just the US reporting season, it's the global reporting season. Lots of different sectors will be represented. I think 3M and Netflix on Tuesday, Burberry and Johnson & Johnson on Wednesday, and then on Thursday we'll hear from Intel, Intuitive Surgical and Procter & Gamble. And there's other companies in and around that. Those are some of the ones that I'll be watching out for those. So a pretty busy week. Like I said, we'll have the inflation report here in New Zealand. We'll have a swag of international companies announcing results, and those flash PMIs late in the week will be really interesting too, and the Bank of Japan, because lots going on in that part of the world at the moment. So thanks for listening, team. Enjoy your week, and we'll talk again soon.
For more insights, visit craigsip.com.